Let me now bring on board R. Venkatraman, Managing Director of IIFL, who joins us now from the sidelines of the annual IIFL Investor Conference. Venkat, morning. Thank you for joining us. So what are the sound bites you're picking up from some of your clients from the IIFL Investor Conference? Are they bullish on India? Are they bearish? Or now they are regretting that they never followed your advice?
Good morning, and I'm talking from the sidelines of Enterprising India, our annual investor conference. The sound bites which we are getting from the sidelines from investors is that, as you pointed out, some of them are feeling left out because the rally has caught everyone by surprise. In the last 45 days, I think India has been one of the best performing markets. The currency has done well, the markets have done well. But overall, the mood is quite sanguine and upbeat about India. I think there are clearly signs that the worst is behind us. The RBI signal about the interest rate cooling off has definitely helped. The things which are the so-called imponderables in the system are, one, in 3 months or 4 months down the line, we'll have our annual meeting with the monsoon. So that, I think, will play a big role, especially when it comes to rural demand and the rest of the agrarian economy. And the other big question is when will the RBI start reducing rates? I think that is one parameter which people are closely watching out. And last but not the least, in a country like India, although the budget seems to have lost its significance in the overall broader scheme of things in the last 2 decades, but still that is always hanging on us, and then you have the elections. So these are the imponderables that can drive the market.
Now that you've established the agenda of the IIFL Annual Investor Conference, at the IIFL Investor Conference, what exactly are you advising your clients? How can they make money this year and next year?
See, actually, we are advising our clients to position their portfolios keeping in view of declining interest rate scenario. Last year we had seen an extreme activity happening in all the defensives, like the FMC stocks did very well, the pharmaceutical space did very well, and all the interest rate sensitive stocks were taking a beating. Clearly what we are seeing is that the interest rate cycle has peaked out, and it is time to position the portfolio in terms of interest rate sensitive stocks. In that context, we like the financials, and we are overweight on financials. The other thing which we like is mid-cap IT space. I think that the companies operating in niche areas will continue to do well. Companies like On Mobile, on which we have buy, should do well. It's in a mobile application space which is seeing a lot of traction. And so these are the broad themes which we are having in this our investment advice to our clients.
So, Venkat, at IIFL, what is or which is your top large cap idea, mid cap idea, and then small cap idea?
See, actually, in the large cap space, we are liking we are overweight on M&M, TCS, Infosys, and HDFC Bank. And on the small cap space, as I spoke earlier, in the small and mid cap space, we like Hexaware in the IT space, On Mobile in the IT space, and stocks like that.
If I look at the broader contour of this particular rally, Indian markets or global markets have gone up largely because of risk on trade, largely because of liquidity. So what are the feelers you're getting from some of your top institutional clients at the IIFL conference when it comes to liquidity? Are they in a mood to buy this market on every decline?
Actually, Nikunj, you have raised a very valid point on this entire concept of liquidity driving the rally and the so-called risk on trade. Clearly, in the last 45 days, what we have seen is that the global system is awash with liquidity, and suddenly people want to take the risk trade, especially given the cues which we have got from United States and Europe that interest rates will be kept high, and suddenly all this carry forward trades seems to have come back in fashion. Having said that, what is happening, and that the feeling which we are getting from the clients on the ground, is that the rally has taken everybody by surprise. India has been the best performing market. The rupee, instead of touching 55 and 60 as everybody was talking, has now gone to 48, 49 levels, and India has been the best performing market. So at a Nifty level of 5400 and thereabouts, people are taking a cautious approach, if I can use, because people who had invested have ridden the rally. People are sitting in the sidelines, and most of them are waiting to get a clear signal on the interest rate front and some signal from the government on the policy initiatives, especially when it comes to so many policies are hanging and they are not seeing the light of the day. So at this point in time, I would say people have become cautious simply because the rally has been too fast and too soon.
Venkat, what is your thought on the PSU banking pack, given the way the interest rate trajectory is likely to pan out, and more importantly, the kind of earnings and asset quality concerns that still loom, pretty large for the sector? What are your top bets there?
See, actually, when it comes to the PSU space, I think valuations are now looking reasonable, especially given that most of them are trading at below book or thereabouts. And as you pointed out, asset quality is a concern, and I think earlier in the show, a senior official from SBI came and talked about asset quality on your show itself, which I happened to hear. And to address this, tomorrow we are having a banking panel discussion in which we have people from the PSU banks, rating agencies, and HDFC to talk about and address this concern which most investors have regarding NPA. So if this NPA issue is addressed and investors get clarity on this entire issue of NPS, then I think there will be a rally in PSU banks.